Morning, Fractal Effects team. We're just in the middle of the morning session. Please make sure you read the disclosure on fractaleffects.com. It's located in the footer. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So what we have right now is an upside expansion model and a buy model. We've had a break to the downside of the manipulation move, but it's still a single leg. We don't have a double break, which means if we get a 5M fair value gap, this thing could still push up. We're right around the 61% fib level of the bigger range. And no divergence yet. Everything is still pushing up, still primed to push up, but we'll just wait and see. Today is Thursday, and usually Thursday does like to retrace back to the weekly range, which is the aqua line. There's the top of it. There's the bottom of it, sitting inside this 4-hour fair value gap and a daily fair value gap, and previous day's low. So in order to get a double break, we'd have to first take out this candle's high, which we have failed to do here. I can't really tell if we did here. No, we have not yet. Just short of it, right at that 4-hour fair value gap. So this could be a runaway market. The opening or NYC fair value gap is a breakaway gap, meaning it wasn't touched at all. That means we could technically use 7 a.m. or sorry, I should say 10 a.m. 10 a.m. Fair value gap to see if it wants to go short from there. But I'm still waiting for that double break. Again, this is all still one leg. Everything here happened within the body of this candle, and even this pullback technically happened within the body of this candle. So this is all one progressive leg. And we're right around 61%. So technically, if we do get a 5M fair value gap and then a 1M fair value gap, we could take that up. Still have to wait and see. But I'm not making a move until I get that double break. So we're getting rejection off this 5M fair value gap. I want to see this candle at least close. Still one leg. All these candles don't count. Still in the body of this candle, and we're still at 61%. So we are below the DSD, below the DSD low. Just have to wait and see. Our bias stays with the higher time frame until we get more confluence on the lower time frame. So there's a 4-hour fair value gap right there. And I want to take measurement of this consequence encroachment here. So we could technically still turn around here. No double break. We hit a 4-hour fair value gap right in the 61% zone. Upside expansion model, buy model. Got to be careful here. Got to proceed with caution. I've said this before. I don't like 10 o'clock reversals. You can see you'll usually get 10 o'clock reversals, or you could get 10 o'clock reversals on days where there are news drivers, but usually that is the 10 o'clock news driver. Today we had an 8:30 news driver. I believe it was unemployment claims. So there's no 4-hour fair value gaps here. Only this big one down here. Previous day's low. So we hit a 4-hour fair value gap, swept the high, closed below. We're most likely heading down to that end dog. And previous days, the weekly range. Can't seem to find here. Weekly range down there. Just hit that daily fair value gap now. About 17 minutes away from range formation. Yeah, I was hoping to get that double break. That double break, if we'd gotten that double break up here, I would have felt comfortable taking a sell here. But there's not too much room. We have the 4-hour fair value gap right here, daily fair value gap. Got to aim for low-hanging fruit. This is all still one leg, meaning it still counts as one manipulation move. So the market could still spring up from here. 4-hour fair value gap, and we're right at the 61% fib levels of the bigger range. Bigger range meaning from Asia all the way to London high. Asia low to London high. This looks like it could be a runaway market. Same thing here, none of these candles broke this high. This candle didn't break any highs either. So this is all one leg. No footholds as of yet. About 13 minutes away from the range formation. We might just have to wait for a confirmation. So for NAS, there's our NYC gap. But for US 500, it's right there. So we had an early formation right on top of the blue zone. Okay, finally we've taken at least the high here on US 500, which means we could get a double break. NAS 100 has not swept that high of this previous candle yet, where there's also a 5M fair value gap, a little sliver. So that is the equivalent of this. Anytime you're looking at two diverging pairs, you'll always find levels that match up. Different levels, but levels that match up. So this fair value gap, this tiny sliver of a fair value gap, is behaving like the opening gap here on US 500. So it becomes a key area of interest for us right now. But again, NAS 100, extremely weak. It's not hitting anything. This is the only 5M fair value gap that it tapped, hit the DSD low, but this was before we had a double break. So still one leg. Let's see if US 500 is the first to either give us a double break or continue up and give us a 5M fair value gap on the other side of the NYC fair value gap. All still one leg. It's a good area to reverse. We had a 4-hour fair value gap and a daily fair value gap. So if we're going up, we're going right into the midpoint of this 4-hour fair value gap above. This is the CFD contract, and it's sitting at 20,196. If we get a double break, most likely heading out to take out Asia lows and into the weekly range right here, 19,814. Let's see which one comes first. We do have an upside expansion model and a buy model, so I would prefer this thing to actually push up. And we have much further room to go, but we also have, this becomes a high resistance liquidity run. We have to get past all these points. DSD low, the blue range, 1-hour fair value gap, DSD high, another blue. We have to get through all that, rip through all that to get to that 4-hour fair value gap. But again, let's see which comes first. At least we finally took out that previous candle's high. So if NAS breaks this low, there's your double break. We're now above the New York fair value gap. I want to see this candle close. If we create a 5M fair value gap above here, then we've disrespected this opening gap and the market wants to push up. Again, if it has a hard time just getting above this, and we break this low, this thing's pushing down. NAS is weaker, so it will most likely break that low first. We got about 6 minutes for a range formation. Now that we're this close to the spotlight confirmation, we just switch over to that strategy. and we use the double break and the blue zone strategy as a point of confluence. So there's only two things that could persuade me to start looking for a sell. That's the double break to the downside or a bearish confirmation on the spotlight. But if you get a bearish confirmation on the spotlight, that means you're getting both of those, because the confirmation would have to be down here past this candle, which would give you your double break. Unless we get that, right now everything is still showing a bullish signal, bullish bias. Since US 500 is the stronger one, I'd be more interested in looking for a buy setup here. Let's see if this fair value gap stays open. So if one diverging pair gives you a 5M entry and the other one doesn't, you can still use this one to see if there's a 1M entry. So when the market comes back into here, if this stays open, by the way, it's still 2 minutes, 45 seconds left. But if this stays open and we don't have a 5M fair value gap entry here, since it's still one leg and no double break yet, we can still look for an entry on the US 500. We just have to wait for market to come back into this zone and then look for 1M bullish fair value gap and closure over a series of candles. And that would give us enough of a confirmation, enough confluence. Ideally, I'd like to get above the DSD high. But we got a tight range here with a lot of resistance. The midpoint of this blue zone would be an ideal place, but I'd have to get the entry here with the stop loss under here. So if we got something like this set up, that would be still only 1.5 to that 4-hour fair value gap. Especially if we're waiting for confirmation. Confirmation might come out, well, it'd have to be all the way up here, at the top of the range, leaving even less room. 1 minute left. I want to see if this stays open. We are back at the 20 EMA, but we do not have a double break yet. Okay, so that fair value gap has been left open. Now I want to see the price come back into this. We're also at the bottom of this previous fair value area. So you got to proceed with caution. This is going to become an area where they engineer new liquidity. There are people that are going to be going short off of here, having tapped this fair value area. And there are people that are going to be going long off of this wick and this fair value gap. So it might take a minute for it to push, obviously, in either direction. But as it stands, I want to see the market come back into this zone right now. This is a great area because we have the NYC fair value gap being used as an inverse, and we have a 5M fair value gap right there that's running right through the consequence encroachment of it. So I want to see the market come back down to this midpoint. And then if we somehow create another 5M fair value gap, we'll take a look there. But right now here, at least there's enough room for growth. The higher we get, the more we lose that. You don't want to get too far away from this wick, because if this is a reversal back up, change of character, then we want this to be our stop loss, our definitive stop loss. No 5M created on the NAS 100 yet, and we're right back at the 10 a.m. fair value gap. No double break. So this was the first 1M fair value gap to be created. Slightly tapped. After that, it hasn't really tapped any other 1M fair value gaps either. As mentioned before, there's our previous fair value area. Right up against it, there's your DSD low. This is where they're going to engineer new liquidity. But we got to tap something. We got to tap a 5M fair value gap somewhere. That's our foothold. Without that, this is an unanchored trade. If you jump in here, market could easily just come back down, either tap this and then go back up, or just rip right through and give you a double break. You have to have a definitive, confirmed foothold. So if we look at the 4 hour, as mentioned before, this is what I don't like to see. I do not like to see a 10 o'clock reversal candle, but we are wedged between two fair value gaps. This one that has not really been tapped, That midpoint has not been tapped, but this one has. This one's been tapped and it's being rejected off of. Still need a foothold. We're right at that area. There's the DSD. We're in this DSD. Because there is no fair value gap here, this is a good place for them to push this back down to allow US 500 then to take that fair value gap. Come on down. Not to mention it just closed off this fair value gap that was being formed. So now this is still the only fair value gap that we have to find the foothold off of. There is none over here. What is this again? This is a sliver of a 4-hour fair value gap. No. Sorry, this is the 5. This is the 5M. This is why it's important to label your fair value gaps or make sure you have a good color. So it's using this. It could use this as an inverse, and that could match up with this point here. But let's see. I want to see it come back down to here. And then on the 1M, we'll look for a bullish fair value gap to be created and tapped. I normally don't like to take trade setups. I normally don't like to take buys when we're this low under the DSD low. Or I'll always take a trade setup into the DSD. That becomes my low-hanging fruit. But as mentioned before, we do have a lot of confluence to the upside still. So there's our tap. Now let's drop down to the 1M and see if we get a bullish fair value gap setup. US 500 on the right, NAS on the left, CFD contracts. So there's our rejection off the 4-hour here on the NAS and off of this 5M fair value gap here. But now let's see if we get a bullish fair value gap on the 1M. That'll become our foothold. This is a good rejection here. We're rejecting not only off the 4-hour, but off this inverse fair value gap, this 5-minute sliver of a fair value gap right there. Now let's see if we get that set up. And if it rips right through and it actually breaks our low, that's our double break. That'll give us a double break and a bearish confirmation, and then we're only looking for a sell. This is why it's important. This is why it's called fractal effects. What's happening on a higher time frame should be happening on a lower time frame. This is how you match it all up. Just because it's pushing in one direction on a higher time frame doesn't mean that it's going to on the lower time frame, and vice versa. So until we get all of our points of confluence, we're still not 100% decided. So if this thing's going to push up, it's going to do it from here, or it's not going to push up at all. And if it breaks this low, it's going down. That's where we're at right now. That's how tight it is. From here, or here. Up, down. And remember, if we push down, so if we break this low, that's a double break. That means we're going into the new day opening gap, and we're going into the weekly range which will take us down into this 4-hour fair value gap here, most likely. But the low-hanging fruit is Asia lows right there. On US 500 CFD contract, that's 5,622. And if we do get that bullish 1M fair value gap and we tap it, then we're going into these 4-hour highs right here. 5,736. All boils down to this. Here or here. That's where the fate of today's bias is going to be decided for both of these. Starting to push up. Let's see if we get that 1M fair value gap. Just be patient. Whatever the fate is, it's going to be decided probably in the next 2-3 candles on the 5M. The whole point of this system is precision. I've said this before. This is, we're approaching the market with a scalpel, not a machete. This is the personification of stalking the market versus chasing the market. We're calling it candle by candle. No FOMO here. Not at all. Again, it hasn't done either or. Hasn't created a 1M bullish fair value gap, and it hasn't swept those lows to give us a double break. So we're cool as a cucumber right now. This is where most people get stuck, though. When they're engineering new liquidity, that's when people start to panic. That's where FOMO kicks in. That's where they want to jump in as soon as possible, looking for the least amount of confluence to align with whatever they think is happening. I can tell you right now, this market has not yet given us a directional bias. Everything here is still saying bullish until we break this low. When we break this low, that's the only bearish. We'll get a bearish confirmation and a bearish, a double break to the downside. Until that happens, everything here is still bullish. And it's saying that. This becomes like the Matrix to you at one point. All these candles, I can just tell you literally candle by candle exactly what's happening here right now. So, nothing of interest right now. We're close though. Sorry, just trying to align this chart here real quick. Time to do a live stream. Everything seizes up. Still watching it on the left here. Everything's fine. Still nothing of interest. No 1M bullish fair value gap. Nothing here. There we go. I think this is going to break the low. If we get that divergence, and the NAS was the weaker pair anyways, so I expect it to break the, if we're going to get a double break, I expect it to happen on NAS first. Since we've already had this early retracement, so remember with the spotlight strategy, if we have an early retracement, then we usually move quick off of the first fair value gap, first 5M fair value gap that's created. But we have to get that double break and that confirmation first. A lot of gesticulation happening here. So we have violated this fair value gap. Now let's see what happens. But until one of those two things happens, we don't make a move. Unless we get a 1M bullish fair value gap, for anybody joining us late, or if we sweep this low and get a double break. Till one of those two things happens, we're not making a single move. Again, US 500 on the right, NAS 100 on the left. Let's see which one gives us the setup first. Without that foothold, you cannot climb a mountain. So as mentioned before, NAS 100 is the weaker of the pair. So we could see a double break here first. And the second we do, that's the dealer revealing their hand. That means this market wants to push down. And it's pushing down all the way past the, well, at least into the end dog, the new day opening gap in the bottom of Asia low. But I suspect that'll go all the way down into this 4-hour fair value gap. We're close. Look at them, just engineering new liquidity. For anybody who doesn't know what's happening, they're getting that FOMO right now. Anybody who's training with Fractal Effects knows exactly what's happening. Nothing. Just engineering new liquidity. They haven't done a single thing here that looks interesting yet. Looks like we're getting that double break. Let's see. Since NAS 100 is the weaker of the pair, this is the one that would be worth taking that sell on. The only thing is we are sitting right at a daily fair value gap. So I do want to see a bearish 5M fair value gap created and tapped. There still has to be a foothold, even with a double break. Remember, double break usually leads to a retracement. Bit of a sloppy day. We're 10 minutes away from 11. No confirmation yet. Just sitting in the toilet. On the 5M, we've already violated this fair value gap. Bit of turn of events here. Let's see if we get that. It might actually give us that 1M bullish fair value gap. The only thing here though is I don't like taking it off of a violated 5M. Closed below. Immediate rebalance. We'll take that. I need to see this candle close though above. So on the 5M we have 2 minutes 23 seconds left. This candle has to close above this. Has to be an immediate 2 candle rebalance. One minute 50 seconds left. So we have tapped this candle. Let's put the fair value gap down here. Nope, see? This is why you wait. Delete that now. That doesn't count anymore. And we're close to our double break. And there's your double break. This thing's pushing down. We still need a foothold though. I still need a 5M bearish fair value gap to be created because we're right up against a daily fair value gap. We're right into a purple zone. Still proceed with caution. There's your confirmation. Whatever fair value gap it creates here, that'll most likely be used as the foothold. There you go. There's your directional bias. We're going past this 50 into this end dog, but again, we need a foothold. I need this 5M. bearish fair value gap to stick. It could just keep running, but I've said this before. When you get this early retracement, it'll use the first fair value gap that's created to push from. It doesn't have to tap it, it could just keep running, but we still need that foothold. I need it to touch here, and I needed to show me that this thing is ready to actually, because that's our stop loss right now. That's a pretty big stop loss on the 5M. I'd like to shorten it by getting an entry here, making that the stop loss, and making this the take profit. So we're bouncing off the purple. I need to see this daily or this 5M fair value gap stay open. If not, keep in mind, I've said this before, we're still near the 79% of the bigger fib, and we have hit a daily fair value gap and a purple zone. It could consider this delivered, but I want to see it get below this 50%. This 50% represents our dealing range, our bigger dealing range. So far it's looking good. I just need this to stay open. And that becomes our foothold. Stop loss, take profit. Don't want to see that close off. This is our sign that it wants to push down. 2 minutes left. One minute, 30 seconds left. It's even made it smaller, but it's still there. Let me just check. Yeah, it's still there. 1 minute, 13 seconds. I just close it off. Okay, so I just closed it off. We do have a bit of a volume imbalance here that I could use, but without a foothold, I'm not interested in taking this. So this again could just be a runner. Even with a double break, I like to see at the very least a 5M bearish fair value gap created, and we do not have, do we have one on US 500? Okay, US 500 has one. This becomes the more interesting pair now. There you go. There's your fair value gap of interest. I want to see the market tap that. Here we just tapped it, I think. There you go. Now we want to see a 1M bearish fair value gap created. Got to proceed with caution since this one didn't give us anything. Right at the 20 EMA. This is a good area. The only question now becomes, is there enough room here to actually get a 1 to 3 risk to reward? We have to still get that bearish 1M fair value gap. But then we also need to have room to grow. Still no 1M fair value gap. And it's closing the gap. See, again, I've said this before. Even if I know where it's going, it doesn't mean that there's enough room there for me to take it. I need there to be a 1 to 3 risk to reward. Otherwise, I'm just wasting my time. That's how that becomes nerve-wracking when you're sitting there and your risk to reward doesn't make any sense. You're risking way too much, even if it like stays here, 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 here forever. And then you only make half that amount that you would have lost. It's not worth it. So right here, as I mentioned before, even though I know it's got to cross this 50 right here, there's the end dog. This doesn't really make too much sense because your stop loss would be here. And your reward is right there. It's not even a 1.04. But we're still waiting for that 1M bearish fair value gap to be created. The longer it takes, the further it pushes it down. Remember, this is day trading, not everyday trading. When you don't see the setups and it doesn't look clean, you don't have enough room, avoid it. It's almost like you're a stunt driver and you're looking at the stunt right now. They want you to thread the needle between maybe two buildings and you realize there's not enough space there. You're jeopardizing it. And look, again, there wasn't a 1M bearish fair value gap created, and the market's back at that 20 EMA. Make sure you tick off every single point of confluence. There's rules. 5M fair value gap tapped, 1M fair value gap tapped, series of closure, series of candle closure. That's your entry. Without all of that, it means nothing. We did not get a 1M bearish fair value gap here. We're still at that 5M bearish fair value gap that was created. And there was no foothold created here on NAS. About 23 minutes left. Looks like it's making another run for the 20 EMA. This is actually a good sign. This will give us a higher entry. I'm still bearish. There's nothing here that's changed. If anything else, this is giving us an opportunity to do that retracement and get a proper 5M bearish fair value gap on NAS as well. I'm going to jump back up to the 5M here. Coming back up into the NYC fair value gap. So this is a good retracement. This is why you don't get caught up in FOMO. You need that foothold. There was no foothold. Now it looks like it's actually creating a good one. I want to see this retracement back to the 20 EMA. Then I want to see one of two things. Either an immediate rebalance happen where there's a 2 candle rebalance that hits one of our zones here and gives us a bearish engulfing candle, and then a 5M bearish fair value gap tapped, and then a 1M bearish fair value gap tapped. But this is all a good sign. I'm not bullish at all now. Keep in mind, I have my two biggest points of confluence. I have a bearish confirmation on the spotlight, and I have a double break. Now we did double break into a daily fair value gap, that little sliver, and into the purple zone, but this late in the game, I want to see a retracement a rebalancing, and then a 5M bearish fair value gap. The only way I would become bullish, which I actually wouldn't this late in the game, I don't think we're going to have time, is if this entire range is broken, the spotlight range is broken, and the top of our manipulation range is taken, which is all the way up here. By that time, there's no room for growth anyways. But this is a good place. We got 3 minutes, 36 seconds. If anything else, I'd actually like to leave a 5M bullish fair value gap here that we can use as an inverse on our way down. So 3 minutes left. I want to see this stay open actually. This is how you use diverging pairs, by the way, properly. They both have to be telling you something, a similar story. So right at the NYC fair value gap. NAS is right at that inverse 5M sliver of a fair value gap that was left right here between this candle and this candle. 2 minutes left. Let's see if it leaves this open. One minute left. Still bearish. Again, this is actually good. This is giving us room to grow. This late in the game, that 50, which is sitting at 19,878.63 on the CFD contract of NAS, that is now my point of interest. That's my low-hanging fruit this late in the game. Because we only have 16 minutes in our opportunity window here. But at no point am I interested in a buy here. If this thing's going to reverse, it's going to reverse and leave me just watching, I guess. Sometimes the best trade is the one you never took. There's nothing about this market that's telling me. It's funny because remember before we had that double break and confirmation, there was nothing that could tell me to sell this market. Now there's nothing that can tell me to buy this market. Either it sets up our sell or it runs out our time window, and I'm not interested after that point. Just want to check the 1 hour. Did we leave a 1 hour fair value gap here? So there's a 1 hour fair value gap right here. Just want to mark off. And no other fair value gaps left here. So that's the highest that this retracement can go. Bounce off that blue zone and then head down. Anything past that will break the range. And again, I'm not interested. Now I want to see an immediate rebalancing, 2-candle rebalance, where you have one candle wicking and the second one engulfing it. And I want to see a 5M bearish fair value gap being created. If none of that happens, it's got 13 minutes to do that, by the way, but if none of that happens, then we're done. And if it just keeps pushing up, doesn't matter, we never entered. I'm not taking a reversal here. About 12 minutes left in our stream. Please make sure you check us out we're on TikTok, we're on Instagram, Fractal.effects. Our social medias are in the footer of fractaleffects.com. We're always posting educational material, follow-ups, any new things that have been created, new blogs. Keep in mind, when there's nothing else to do, when you can't find a trade setup, go to MarketWatch. MarketWatch, we're literally updating that every single day for you guys. Multiple stories on different sectors, what analysts are saying. Remember, we're not allowed to give financial advice. That's why we created MarketWatch, where we're telling you what the analysts are saying, what industry professionals are saying, or what even CEOs from certain companies have been quoted as. They're giving you projections. They're telling you exactly what the market could be, where the market could be headed. That's all part of your package. Right now, a Fractal Effects package costs the same as a gym membership, if not less. Gym memberships are getting actually pretty expensive. But if you're spending that much money, $50 a month or more on your gym membership, you got to be spending at least that much on an education in the financial industry to understand how the markets work, to become your own investor, to learn how to become your own investor, I should say. That's worth it. Still just waiting. As mentioned before, nothing about this market is telling me to buy it now. I think we're headed up to this 1 hour fair value gap right here. This is where we'll most likely see that immediate rebalance. There you go. Now I want to see it wick down. If it keeps pushing up and it breaks our range, that's an invalid day. this. So there's the top of our dealing range right here, that line. If we wick past that, that's an invalid day. Nine minutes left. I'm not sure we're going to get that set up in time. Remember, if you're not in a high probability trade setup within 1 hour after that range formation, that's it. We're done for the day. We're not only at that 1 hour fair value gap, we're also at this NYC fair value gap that was not touched in the morning. It was a breakaway gap. So if we see an immediate rebalancing, hasn't touched it yet quite, but if we see an immediate rebalance, there's a blue zone, NYC fair value gap, 1 hour fair value gap. This is where I want to see that immediate rebalance happening, and a 5M fair value gap, bearish one presented. Now let's just see if it happens in our time window. We're very close to invalidating though, right here. So as far as divergence, if one pair gets invalidated, that's it, you're done. Hoping it stays down here. Since US 500 has already tapped its opening gap, it doesn't need to necessarily sweep here. That's why I'm hoping that it stays below this. Zoom in a little bit more. And just tapped it. Let's see if it pushes past it. There you go. Oh no, there you go. Yeah, so it's invalidated. Doesn't mean that it won't give us that immediate rebalance here and or push down, but as mentioned before, both of these strategies have to work in confluence with each other. They have to align. That's just part of our rules. So when one gets invalidated, they're both invalidated. Both diverging pairs and also the two strategies, they have to work in conjunction with each other. So even though we'll most likely, we could get our rebalancing candle here on the next one, and a 5M bearish fair value gap and a push down, I'm just not interested now. The fact that it's invalidated US 500. See, it's right there at the blue zone. This is exactly where the rejection would happen. But you want these two strategies to be aligned. That's when you get the highest confluence, if they're both heading in the same direction. So we'll conclude our session there. But come back, check it out after. This is your homework. See if that rebalancing happened, if you did get a 5M bearish fair value gap and a push down, or if it just kept driving up and up to take out the manipulation range high, and then go into that 4 hour fair value gap, which again would have invalidated it. We wouldn't have gotten in anyways. But I'll leave you with that. We'll be back again next week on Tuesday. So have a good rest of the week and a good week.